Hey guys, Mike here. So this is going to be a loaded video because we had a lot happen today, a lot of economic data dumped. You might have noticed, wink, wink, unemployment rate went up a little bit if you hadn't heard. And also, the fact that Tesla's getting crushed, Disney's getting crushed, there's reasons for that. I'll show you. Chinese stocks are mooning like it's 1999. I will show you that as well. I'm also going to share just a partial clip of a members video I did a couple weeks ago, because the one thing you're going to hear about more than anything else over the next probably 4 weeks is going to be the 2-year, 10-year curve, which has been inverted, okay? But you need to understand how that works, okay? But I'm going to start off with this because, and hang in here with me just for a second, that every year, what have I been saying for a couple years now? It's like a hot potato. There's going to be a hedge fund manager that gets really hot on their calls, right? And they're going to be called stupid and idiotic and all that stuff, and they'll end up being right. And then all of a sudden, they'll start being really wrong, right? Who was it? 2021, at the end of 2021, going into 2022 to October, was Mike Wilson, right? Well, of course, if you look at Mike Wilson now, it's like he has, in his own words, it's like he has leprosy. Like nobody wants to talk to him because he's been dead wrong, right, since October. Then, who did he pass the hot potato to, though? He passed it to Tom Lee. And Tom Lee has been, to his credit, I mean, this dude has been pinpoint accurate. I think a couple months ago, he said it was going to be a 150-point move, and we hit exactly 150 points. It was crazy. But he has absolutely done it. But I saw an interview with him today, and he has a new call. The new call is going against all historical data. He says we're going to have a 2 to 3% bump in September. He thinks it's going to be a good month. So I want to at least put that out there to you because I feel like that's my duty, okay? Again, I don't pay for any of his data, nothing like that. I just saw an interview today. It was fascinating while I'm getting packed for this trip I'm fixing to take. And what's crazy about it is he looked exhausted. He looked stressed out. You would think it'd been a great year for him. But he says his clients hate him. He said they're so upset at him. He's working more hours than ever because they just feel like the market shouldn't be up, right? Which, I mean, obviously. And they're very mad. He keeps telling them, do this, do that. And they're like, no, get out of here. And they're so upset when they won't listen to him. And even when he makes some money, they're still upset because it doesn't fit what they believe should be happening, which is just crazy. It was actually hilarious to listen to. But here's a guy who's been in the business 30 years. And I'll tell you what, because remember, he had leprosy last year, right? He was dead wrong all last year, except when we finally got to October. And understand, he said something that makes sense, which if you think about it, after 30 years experience, he said, the market never makes sense. Because somebody was asking, like, why are they upset? He said, the market never makes sense. If you really think about it, how many times you look back and go, oh, yeah, this is what should be happening right here, versus, why is this happening? What's going on? And so, right now, he has the hot potato. He's been hot. We're going to see if he's right in September. If he's right in September, he's still hot. And if you notice, what he's doing is actually really smart. He may make a long forecast, but if you notice, he's making short, incremental forecast, like 3 months, like quarterly almost, right? And that's what he's basically doing. Because remember, he said, get out. He told his clients it's going to be a rough August. And then he came out August 22nd. He told his clients to get back in. And he was right on the money, right? And so I'm telling you, but he's making these short forecasts, right? Because even he said, he don't know what's going on in 2024, but, that's what he's doing. So I just want to make you aware of that, just FYI. Again, if he's wrong, maybe he's fixing to pass the hot potato to somebody else. So we'll have to see. Let me know what you think in the comments about that. Now, on this economic data, as you can see right here, most of the things come in about right as expected, right? You got average hourly earnings month over month, a little bit less than expected, but not much. Then you go down to manufacturing payrolls, non-farm payrolls actually came in hotter than expected, so more jobs supposedly were created. Don't forget, though, they've been knocking these down every month and revising them down, so just keep that in mind. Non-farm payrolls private, again, came in hotter than expected. Participation rate came in like right as expected. And then you get to the unemployment rate, 3.8% versus 3.5%. So it bumped up, right? So, of course, the market's like, oh, the Fed's got to love that, right? These rate hikes are working. Soft landing, here we go. No more rate hikes. Then you got the S&P Global Manufacturing came in right, really expected here. Construction spending came in a little bit better than expected. ISM manufacturing, employment came in higher than expected. And pretty much all the ISM stuff came in hotter than expected. And when you look over here, you can see ISM manufacturing on this chart. That's pretty much not where you want to be. It's up 47.6% versus 47 estimated. Prior 46. New orders fell to 46.8 versus 47.3. It's not a big difference. Production back up to 50. Prices paid still contracting, but at highest since April. And then employment improved, but also still contracting. And then when you go to unemployment, this is like if you're unemployed for like 27 weeks, right? It's kind of like an average. And you can see it's starting to round out at that bottom right there, right? And this is what the Fed wants to see. They want to see it rounding out right? And if you go back to '08 right there, of course, what happens on a rounding bottom on a stock chart? It starts to go up. And so the question is, how far is it going to go up? That's the big question. But you're starting to see the weakness start, right? You're starting to see these rate hikes take effect, okay? And understand, we'll get into small caps later on and stuff, but who should affect more than anything else? Small businesses, right? That's who rate hikes should affect more than anybody else. That's where you see majority of bankruptcies, because they don't have cash like Apple does and billions of dollars just sitting around doing nothing. Okay, so keep that in mind. Right now, manufacturing is still a mess. I mean, it's still in contraction all over this country pretty much. So again, though, what's 70% of our economy? Services. So that they're trying to slow that down. Now, I want you to just take a quick look. I think it's literally like a minute long or something to understand what's happening, because the 10-year spiked today, I believe it was, but I believe the 2-year also spiked as well. And when you look at this, remember the yield curve, that's the yield curve that's talking about 2 and 10, has been inverted for quite a long time, okay? And usually, eventually this leads to a recession, but it's not why it's inverted. It's when it starts to rise up and uninvert, right? That's when you get it. So watch a small clip on this members video I did last week, and I'll catch you on the other side. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Now, understand, you're going to hear a lot about recession coming up, especially going into 2024. And, to be prepared for this, it's not something that's going to happen overnight. And you got to understand what the 2 and the 10-year yield curve we're talking about, which is inverted. The problem's not when it's inverted. The problems get really bad when it uninverts, which is really kind of trying to do now. But we thought we had it a few months ago. It was going to uninvert. And, oh, Lord, here comes a recession, but it did not. And yes, over to the right is where we're at now. But you can see, plain as day, the gray shaded areas or the shaded areas are the recessions, right? Well, you can see you got a good, once it uninverts, you can have anywhere from 6 months to like a year and a half to see this coming, right? And when we come over, you see what I'm talking about right there. We come to the next one, you see the exact same thing. When it uninverts, boom. Again, you're not going to know we're in a recession. These official recession numbers don't come out until like a year later. But I want you to be able to look at this to understand, like, okay, why are we in a recession now? This kind of tells you why we're not in a recession. This is one of the things I'm going to show you. And you can see plain as day. Other things we pay attention to, right? Unemployment rate, really low right now, right? And usually going into a recession, it's not very high. What happens is you'll see it. It'll start to tick up, and then it'll skyrocket when we actually hit an official recession, right? That's how you really know, like, oh boy. You see it, it's there and goes sideways, and it starts to tick up slowly, and then it takes off like a rocket ship. And it does it every single time like this. And so, of course, are we starting to see unemployment start to tick up, right? Are we starting to see the actual yield curves that are going to uninvert and start heading higher finally and stay uninverted? That's the question. But you still have, according to historical standards, still time. It's not like an uninversion you go into a recession. So hopefully you got something out of that. Let me know in the comments what your thoughts are on that. Now, speaking of what's going on with small caps, for example, you saw the SPY, nothing going on today. The Qs was red most of the day. But you had IWM saying, hold my beer, up over 1%. At one point in time, it was like 1.8% up. And I talked about yesterday, once it gets in a gap, it likes to move. And I'm talking about a volume gap. And also it was filling a gap. It got above that 50, as you can see right there. And I can remove that gap now, start cleaning up this chart. But that's how this likes to move. Because think about it, fundamentally, if any of the stocks are going to be affected by this economic environment more negatively, it's going to be small caps, okay? But again, the market's not moving on that, right? And so if it's moving on the premise that, hey, they're not going to do any more rate hikes and there's going to be cuts next year, whatever, then of course they're forward thinking and go, ooh, look, the small caps will rise because they've been underperforming compared to the other ones, right? And when you look at that MACD, we talked about you got the bullish MACD cross right here. If we pull up the RSI, which is actually positive as well, you can see right there we got over the 50, came back down, retested that line, and moved up. That is bullish as well. So above the 50, RSI, MACD are looking good. It's in a volume gap. And this is how this index actually moves, or this ETF, you could say. And another thing that helped it, and I couldn't find anything on this one, was regional banks. It has a lot of regional banks. And I told you, when the regional banks are super green, you're going to see IWM probably outperform all of them, and it did. If you found some news on that, let me know. I couldn't find anything. Now, as I told members in the morning news brief, Chinese stocks are booming and why? This is what we talked about. Chinese intensifies their efforts of stimulus. So what they do, the central bank will trim the amount of foreign currency deposits banks are required to hold as reserves. And they also came out and announced fresh stimulus for the beleaguered property sector and unveiled plans to expand tax breaks for child and parental care and education. So they're pulling out all the stops in this thing. That's why you see right here, I told you their economy can be in shambles and be hot and garbage. It doesn't matter. All the stock market cares about anywhere in the world is some kind of liquidity in some form. They don't care what it is. It is like crack cocaine. They do not care. I told you the market is a junkie. That's the way it is. All it wants is fix, and its fix is stimulus. It don't matter whether half the population is out there homeless. It don't matter. It's a casino, okay? And I got something I'm going to do a members video on this too, showing this guy's been in the market for 50 years, very successful, saying the exact same thing. So you feel good when somebody who's actually been in it for a long time says the exact same thing. So that's what this is. If you're going, I don't understand. Will it continue? We'll see. But again, we all know what their economy is right now. But the market's moving because it's just like this one. All it wants is some form of liquidity. All right. Now Tesla, whoo boy. Tesla comes out last night and they cut prices in the US, as you can see right here, up to about 20%. And then they also cut prices in China, as you can see right here. So again, the market always punishes them when they do this. And also they cut the self-driving capability fee. I guess it was like $15,000. They cut it down to $12,000. So a lot of price cuts for everything. The market always punishes them. You can see by that huge red candle. Again, lost the 50 right there, as you can see. If we look at this a little bit closer on the 15-minute chart, like we talked about, it was ranging. You can forget about that now because obviously that is gone. And so we can get rid of those support and resistance levels right there. We also lost both the trend lines here. And so major push down over 5% today. And then when we bring in the volume profiles, like I said, it's in this no man's land, right? Where you're sitting there going, wow, you're in this, it's just because of the way it moves, right? It rockets up, it rockets down and everything. And you just look at that and go, well, you're hoping to get some support around 240, 242, somewhere in that area come Monday. Or, they continue to push this down. Again, it's going to be how the options is. If puts start flowing in like crazy, people are just buying puts. Gamma squeezes happens both ways. And so we'll have to see what they're going to do with it because today it's definitely not catching a bid, as you can see. And so, that was a big move down, breaking a bunch of different supports right there. And so we'll see what happens on that one. AMD, big move today, even though NVDA was red, which is surprising, right? And so now it's gotten up there this level, and that's what's going to be a lot of resistance at 110 because you got that trend line that it loves to respect. You got the resistance level. You got the 50 right above it. And so, again, we'll see if it can break through 110. If it does, this one's going to keep moving nicely. Just keep that in mind. Now, Disney can't buy a break. That's what I was saying the other day. I just can't put my money in something right now that's just hot garbage, And again, if it's going to bounce, this is where it's going to bounce. So if you're putting it in there, this is where you're like crossing your fingers going, it's got to catch a bid, right? It's got to catch a bid at some point in time. And, again, when you pull out and just look at the bigger picture here, you can see it's really at almost at COVID lows. I think it actually did hit the COVID low today, if I'm not mistaken, and the 2014 low. And so that's what I'm saying. In this box right here, you better hope it bounces because if it breaks down from this, your guess is as good as mine where we're heading. It's going to be years that we probably don't even remember, going from 2000 to 2007, how Disney performed. But what happened was it was a news event, right? TV stocks fall after Charter and Disney have a disagreement, I guess. They couldn't reach an agreement. And so Disney actually blocked TV channels like ESPN, ABC, and stuff off of Charter. And I guess all the stocks just fell off of that. Not just Charter, but you had Paramount and everybody else falling right along with it. And so let me know if you're dollar cost averaging into that one. A lot of people are. Again, I showed you the other day, the fact they've tripled their revenue and yet their margins are way worse. And their net profit is actually, was it 3 times less than it was 20 years ago or some crazy mess? It's just crazy. And so they got a lot of issues. They got to work out and stuff. And should it get a bounce? Technically, yes. Most of these stocks tend to get bounces, but it's not a tech company either. So just kind of keep that in mind. So there's just so many other companies that, as you can see, that move up so much more than this one. So maybe it'll get a bounce. Maybe you start seeing some momentum. I'm not big on jumping on, in front of trains and stuff because if it does break out of that box and keep heading down, well, that's a whole different problem. I'd rather give up, 5, 8%, whatever it is, to see it actually get some momentum, some real momentum, and a real reversal. But that's just me. That's my risk profiles. I like to do things and stuff. So keep that in mind. Or, leaps is another way to go. Obviously. Because time will be on your side. So anyway, let me know what you think about Tesla, Disney, what we talked about with the Chinese stocks and stuff, and also what you think about the unemployment rate popping up and everything. And so I hope you have a good weekend. Please hit that like, subscribe button. I'll get you Saturday's video tomorrow. We answer a bunch of your questions. I will answer your questions about the MACD and all kinds of different things, the tax stuff, all that. We'll talk about that tomorrow. So hope you guys have a good one. I'll see you later.